Hello, here's Kramer's Corner with a special edition of Technical Update Equities, and it is again the Magnificent Seven, which we are going to look at after most of them have now released earnings. Starting with Alphabet C shares that also released earnings last week, and we saw the share price shooting higher above the 179.22 resistance, almost all the way up to resistance 175, but it totally collapsed, and now it's again testing the 170.45 key support. Close back below that, well, then we could see further selling pressure towards 165 and maybe lower. However, we do have the 55 moving average still pushing up, and the 200 also pushing up, and the 100 giving some support. So I think that we will see a bounce from here, from the 170.45 in the coming week. We have the RSI on the daily also in a positive sentiment, no divergence, indicating likely higher levels. So I think we'll see a bounce. On the weekly chart, well, the uptrend has been confirmed, and it will be further confirmed if RSI on the weekly comes back above the 60 threshold. It is already in a positive sentiment, meaning that there is potential higher, and there's no divergence on the RSI either, so we should see a push higher. But that was a little bit of a blow there. But keep an eye on 170.45. Amazon. Also earnings out that push the share price higher. First, it broke this triangle-like pattern here above the 191.52, and at first take got rejected on 195.37, but then it shot all the way up to almost the previous all-time high area. At least it was above 200. There's still potential higher. We are in a positive sentiment, despite a slight divergence on the RSI, as we can see if we add a trend line here. It really needs to break above that, but it has already broken above the falling trend line. We're above 60, so I think we'll see it pushing higher going into the coming week. The weekly chart, well, there is divergence on the RSI, but if it can break above the weekly RSI can break above the upper falling trend line there, well, then I think we will see a push higher. And also we can see that actually the volume also picked up, so it's actually supporting the bullish trend. If we are moving back below 195 and close below that level, well, then this bullish trend here could be in jeopardy, and it will be totally demolished and reversed if we move back below the falling trend line. Apple. Well, it has formed this rising wedge-like pattern. I think we talked about it last time, about a week ago or so, when we talked about Apple also. Broken bearish out of it. Sell-off got beaten down below the 100 moving average, as we can see. Could fall further. I think there were bids coming in. We can see that it actually came in here late in the session Friday, so lifting it a little bit. 214.60 around that level. There we have some support. If we close below that, then we'll also close below the cloud area. And the key thing is also, you can see RSI is actually negative at the moment. So we are in a negative sentiment on the daily. We are below 40, indicating we could see a push lower, but the key will be here around the 240 level. Looking at the weekly chart, zooming in a little bit, there's been divergence for quite some time. The RSI has stepped over. I think we just should adjust this a little bit and push it to this level there. You see the values have been declining, where the market has closed higher, and massive sell-off here last week, indicating maybe we have a double top going on. The bearish engulfing pattern here is still in play. It wasn't cancelled out. We didn't get a close above it, so we could see a break lower if it takes out the lows here. And let's just add the horizontal line just to give you an idea of what we're talking about. 213.92, and that's that little spike down there. We could actually add that and say, okay, this is key just below 214. If we get a close below that level, well, then the 200 level and 196 support area here, that very strong support in this area, could come under pressure. For Apple to resume uptrend, it needs to move back above the rising trend line here and stay above that and push higher. But for now, it looks quite heavy on Apple. Moving on to Meta, that also shot higher, forming this, but then collapsed and forming this maybe double top pattern. It's not the most beautiful one, but still you can see key support here at 562 around this level. That is key. A close below, then I think we'll see further selling pressure lower. For Meta to really establish a bullish trend, it needs to close above the peak there at 601.20 from the 30th of October. It seems like we will have a sell-off coming in if we and let me just show what we can do here. So what we do, if this is a double top, well, then we measure the distance from the top to the low or the valley, which is this is the valley. So what we do, oh, hang on, we just need to adjust that one. There we go. So potential down to around 525. That's the rule of thumb. But what we can also do, we can add Fibonacci levels to it to say, okay, from the lowest part of the valley and then down, and then at least 161.8 is the distance it should travel, and that will be just around the 537. We have a bit of support here at 542, 543. So I think that would be the minimum it should travel, that distance. RSI a little bit indecisive, still in a positive sentiment. There is no divergence, so that is also a little bit blurry on the picture. So keep an eye on 562, that is the key support. On the medium term, on the weekly, we are still in a bullish trend, but you can see massive divergence on the RSI. And since this is an educational piece, there's no advice whatsoever mentioned during this or intended. Then I add these levels and these trend lines and so on as we go. Some of them, of course, are prepared, otherwise it would be too long, but you can see massive divergence here on the RSI. So it looks very stretched. So the 562 level, 561, that will be a key for Meta, bullish or bearish here in the coming days and weeks. Microsoft, well, a little bit disappointing. Also, announcement from Microsoft last week, hit by massive sell-off, gapping lower below the low rising trend line. It opened more or less smack bang on it, took it down to the minor support at 408. Did get a little bit back up here above it at the end of the week, but it looks really bad for Microsoft. We also have a kind of a double top pattern. It's not the best one, but nevertheless, it got rejected just below the previous peak there. Looking at the weekly chart, we can see what's been going on. We talked about it last time. We talked about Microsoft, and zooming in, you can see we have what seems like a shoulder-like pattern. It is a little bit of a complex one, as you would basically have two shoulders over here. It is not uncommon, but what we also have, we have this massive bearish engulfing. You see market open up here, took out the entire gains from the previous week and closed well below it. So we sellers are definitely back in control. We also have massive divergence. You can see the tops or peaks here on the RSI are lower than over here, where the market is higher here than here. So that's a divergence indicating a trend exhaustion. And also we can see the volume picked up last week during the sell-off. I think if we see it taking out the 407 here, 400 level the coming week, which I wouldn't be surprised to see, then we can see a further selling pressure. And of course, the key support here around 380, 385, 388. That's the little spike down here. So that is actually what we call the neckline. If it takes out that with a close, well, then there's potential much lower down to around 340 going into the rest of the year. But let's see if it can get back above the lower rising trend line here and close this gap. It needs to close this gap as a minimum to have a chance to at least establish a bullish trend. If it closes above 441.85, it it will have demolished this shoulder head shoulder like pattern here, and there is further upside potential for Microsoft. Moving on to Nvidia. Nvidia hasn't released earnings yet. I believe it is the 19th of November, so a little bit late. However, it is trading this rising channel-like pattern here, very close to tested here on Thursday last week. There's a little bit of divergence on the RSI, so it seems to be struggling a little bit. If we just zoom out a little bit on the daily chart, we can see, well, it actually did record a new all-time high close, but then it's been struggling a little bit of correction, but the trend is still up. If it breaks below and close below 128.74, well, the bullish trend has been demolished, and we could see a reversal down to 120, 113 level. But for now, it is still intact despite showing some trend exhaustion. What is also key is to look at the weekly chart. We can see here on the weekly chart, well, it actually formed a bearish engulfing Friday. So a bearish engulfing is, you can see market opened up here. Let's zoom in a little bit. Market opened here and closed here after dipping a little bit. It actually engulfed the entire previous candle, actually the previous two body candles. And we're talking about bodies. This is the body. We are not taking the wicks or the shadows into account. It is the body. That's where the key levels are, and also most important one, the closing price. Also massive divergence on the RSI. That is key to watch. That is indicating a trend exhaustion. It really needs to come out with some blow up numbers here in mid-November when the earnings comes out, and that could be really key for Nvidia. Until then, I think we could actually see it maybe just moving sideways around the 130, 140 level here. But if it breaks below 128, then we could see further selling. Moving on to Tesla, that massive volatility going on with various announcements. First, it got hammered below the gap area here, then it traded around here in this range around 215, 220, and then suddenly some better than expected sales came out and massive jump above the rising trend line, and now it is back again testing the rising trend, actually closing a little bit below it. So again, this gap area here could be key. What is also key to watch out for or keep an eye on is that, well, it did break higher. We got a higher close, so we are actually in a bullish trend. However, look at the RSI, didn't really confirm it. So it is actually, there's some divergence on the RSI. So I want to see the weekly RSI closing above the falling trend line there, and the Tesla share price to close above the peak here from last week at 273.54 to really establish a bullish. If that scenario plays out, well, then there's potential up to 313, possibly higher. But for now, it looks like it's a little bit weak, but positive RSI. So there's no divergence. So there is, it's pointing all over the place. So be a little bit cautious. I would stay on the sideline a little bit to see if we can actually start pushing higher here in the coming week and keeping yourself above the rising trend line. Well, then we could have a push higher. And then I will go, if it was me, I would go more bullish into it if it takes out last week's peak. But if it does move back below and close below 234.25, well, then we could see a selling pressure increasing lower. All right, that's all for today on the Magnificent 7. And there will be more updates coming your way also on the semiconductors. And of course, I will keep an eye on companies that are reporting earnings that could be of interest. Have a nice day, and talk to you again soon.